let's go back to the personal side of it, because that's what affects your employees, that affects you as well. Interest rates and inflation under control. So we all just talked about this. Interest rates, June 13th, 14th, I don't think they're going up. But we need to see cuts. Now, when can we see cuts? The Fed actually wants to see more unemployment before they make cuts to the interest rates. Now, I think they're going to get their way, and I don't want to see heavy unemployment. I just want to see enough signals in the broad market that the Fed feels comfortable dropping rates, and I'd like to see one drop, maybe two this year. I'm not betting on it, though. I think we'll see one drop at the end of the year because they really want to see 2% inflation, but inflation is not under control yet. It's still over 5%. And so now what do? So I have a consumer price index chart. I want to show you something here. So this is where your employees live. This is where you live. This is where America lives. And so remember, the stock market could be going up because tech has more profits because they laid off a bunch of people. Well, that certainly isn't good for those bunch of people. And we have a consumer price index.
Yep, I pulled it up.
Here we go. So you can see the consumer price index is coming down. But you can see what happened to inflation there starting, it really went nuts at the end of 21. So all 21 and 22, you can see what we had. Inflation went nuts, and we almost got to 10% inflation. I think we got to 9%, 9.1. So year over year, we're good. But year over year, it just means the prices are still going up. Go look back at 2015, 16, 17. That's what we want to see. You want to see consumer price index 2% a year, maybe 3% a year. You can see where it was, and we are still, where are we right now officially according to the end of that curve?
4.9.
4.9%.
As of April, so obviously it should be updated a little bit on that end.
Yep, so I think we're 4.5, things I've seen. So you can still see this is happening, but we still need the Fed to cut rates. But I don't think we're going to get that to the end of the year. So we go from 9.1%, now we're at 4.5%, so we've cut it in half. Government running for office, bureaucrats, not people running your business or paying your employees or paying your paycheck, they say, we've cut inflation in half. Well, that's kind of like saying you wrecked your car and you came home and your dad was yelling at you, but your sister walked in with straight A report card, and now your dad's only half as mad. He's still pissed off. He's still really mad. He's just half as mad. That's the economy. That's what we got right now. So year over year from June, 9.1 down to 4.5. Pretty good progress, but we got to get to 2% inflation. The Fed has to say, I want to see 2% inflation. And you saw where that chart just was that we showed you. And it was 2.5%, 3%. Show it there, April of 15.
April of 15, yeah.
0. And then it went up. Take me to 16. See, 2, 2.7.
16, 1.5.
Now you can see why the government wants to see 2% inflation. It wants to get back into that zone where we were for a whole bunch of years. In 2015, it was pretty crazy. Consumer price index was 0. That was pretty good. So what are we saying? We have $1 trillion in credit card debt. People need relief from inflation so they can get that down. We have mortgage rates that are still hovering. What is today's, can you do a...
mortgage rate?
Yeah, just do a Google search on this. Today's mortgage rates, and let's find a 30-year fixed for good credit people. As of Friday, it was still 698 that I saw.
It's a 30-year loan amount. This is a calculator. Let's see here.
Yeah, just
So
find
I see
30-year...
6.9 to 7.02.
So in other words, that's... I had it at 695 to 698. So over the weekend, there's actually 0.3. So mortgages are still 7%, gang. So your government may say, we have cut, Joe Biden may say, we have cut, inflation in half. Consumer price index has gone from 9% to 4.5, and then Biden falls down or something, has to be helped up. And Meanwhile, it's a 7% mortgage. And people that want to retire and still have a little bit of a mortgage in there, but a small one they're going to be able to afford in retirement. My mom had a small one for a while, like $200,000, small mortgage, very manageable. She had a pension, she had Social Security, and she had a 401k that she was forced to take a little allowance each month. Put that all together, she was able to afford, you know, $1,200 a month on a very reasonable mortgage on a house she had. And so guess what? If she was moving, you know, I've moved her down here with me, down in South Florida. The 86-year-old Biz Doc mom. There's the Biz Doc babe and the Biz Doc mom. And the Biz Doc mom, I look after her. You know, I want to make sure things are okay. But if she had to move down here now, she probably wouldn't be able to do it. And now a lot of people are in the same position. And then people that are being forced to move for work because they're getting laid off. And yes, there's layoffs happening. We all know. 7% mortgage, they can't do it either. And with the 7% mortgage, you have a lot of people. What did I just describe? I described my mom that wouldn't have sold her house. Because 7%, she's like, why am I going to sell my 2% mortgage that she had, go down to Florida and get a 7% mortgage on a house that's slightly more expensive? Suddenly they don't move. And there's a big chunk of the economy that has citizens in it and consumers that don't have to move. Lose the job, you got to go, you're forced to do it. But right now, the mortgage side of things still doesn't look good. So, you know, escrow companies, title companies, mortgage companies, RE/MAX, Century 21, you get a lot of companies out there that are still out there. And, you know, those stocks and that part of the market's not going to be looking good. So right now, we're heading in the right direction, I think, but now is not the time to buy a house. Now is not the time to do that. Now is the time to keep hunkering down in your business and focus, focus, focus